Hello everyone, this is Golden FS. Welcome to today's section. And today we are discussing R of SRP, which is range, and this is probably the most important thing in technical analysis. The most important thing in technical analysis, and this is the reason why a lot of people are having losses. So today you are going to learn what a correct range is and what it is not, how to mark a range after RBS or SBR confirms on 4-hour time frame. So you also get to know RBS, SBR if you don't know it yet. Then the third thing you will learn is range high, range low, and equilibrium, and how to identify them using your Fibonacci Retracement Tool. Some people don't know how to use that tool. You will learn how to use it and when to use it. You don't use it at every time. Also, you also learn premium and discount zones, and then internal range and external range, is internal range liquidity, external range liquidity, and how price move between the two, and then liquidity inside the range and why it matters. And then the last thing is the 50% of the range and why equilibrium is inducement territory, not entry territory. All right, so I'm going to share my screen so that as we get started, we will be talking about it. All right, can you see my screen? Can you see my screen? All right, can you see my screen?
Yes, I can see. Yes.
All right, so range is the second layer of SRP model. You cannot reach a range without confirming structure first, and you cannot reach POI without range. You can't go to your POI. You can't start talking about entry. You can't start talking about entering a trade if you don't know, if you don't have if you've not marked your range yet. And many traders, they skip range entirely. They just see a support level and a resistance level, then they connect them and call it a range. Then they mark their entry and the price hit them out because they are entering at the wrong place. That is not range. That is guessing. That is guessing. So this class teaches you what a correct range actually is, how to mark it precisely on H4, and how to use the Fibonacci tool to divide it into zones, and why the 0.5 equilibrium level is a trap that will stop you out if you treat it as an entry zone. So what is a correct range? Well, a correct range is not two obvious price levels you draw on the chart. It is not the distance between yesterday's high and low, because some people make that mistake. It is not the distance between yesterday's high and low. It's not like this. So let me move this and spread this. So that is not a correct range. All right. So it is not a support and resistance zone. It's not an ordinary support and it's not a random support and resistance zone. A correct range is a swing created by the structural move that confirm direction on higher time frame. It has a precise starting point and a precise ending point. Both come directly from RBS or SBR event on the 4-hour time frame. So this distinction is very important because most traders, they draw range before direction is confirmed. No, they see two levels, connect them and start looking for entries. That is not range. That is pattern recognition without context. In trading, you trade with logic. So what is a correct range? A correct range is, where you mark your range is on the 4-hour. You mark your range on the 4-hour and you wait for price to come to your range. So look at this is a correct range. It starts with a liquidity graph. Like I said, market that we sell, we first of all buy. It started with a bearish liquidity graph. It came to this zone and started with a bearish liquidity graph. After doing a bearish liquidity graph, it broke below. So turning that support into resistance. So this is EU, Euro USD. So it broke this low. This is for sell, SBR. So we are going to remove all of this and this. So Because when you look at the chart, there are so many ranges. The question is, where will price use? Which price? So when price was here at this zone, when price came here and did all of these things and created this setup here and then broke this low, price wants to use this range, right? In SRP, correct range, in fact, one that has a high probability must, if it is for sale, it must start with a bearish liquidity grab. It must start with a bearish liquidity grab. Then price must break the lows. I've been tweeting about it, I'm talking about it on our Telegram channel. After price breaks the low, the moment price breaks this low, it turned this place into, a resistance zone. It turns it into a resistance zone. It broke the low, turns it into a resistance zone. So you now use your Fibonacci to mark a level. So I want to show you guys something. Can you see this? Range high, range low liquidity using your Fibonacci. Can you see this?
Yes, I can see.
All right, so
Yes.
that range that we marked, zero is, for example, for that cell, zero is where the range started, the high of that range high. For that cell, zero is the range high. All right. Then you have the 0.5 of the range, which is the equilibrium, which is the middle. That is, I'm going to, after interpreting it, I'm going to show you on the chart on that particular range. 0.5 of the range is inducement, is the trap zone, is the middle, is the equilibrium. You don't, so whatever setup that is formed there, you don't really need it. Then you have the 0.6 18 at the premium zone. That is type 1 SRP. That is where you start considering when price comes back there. That is where the premium zone started. That's where you start considering entry, looking for confirmation when price comes back there. Then you have 0.786, 0.7, which is the deep retracement, type 2 of POI SRP. We are going to talk about that when we talk about POI. Sometimes price also gets there. And then we have 1.0. This is the source order block where price does 100% retracement and goes to where the move started. All right. Price goes to where the move started and then gives you your confirmation of what time frame and sells from there. So let's mark the range here. So this is the range. This is the beginning of the range for this cell. So this is the high of the range. This is the low of the range. So for this cell, here is low, this is 0, and this is 1. This is 0.5. This is 0.5. You will see the market even came here and sold from this zone. And then market came to 0.7. Where it finally sold was here, 0.8. It swept this high as liquidity, and then it sold. It sold and came to, close. It gave 1:2, 1:3. It came to this low, right? And since then, it's ranging, but at least it has given you something. All right, so this is the full range. This is Euro US. This is the full range for sell. Market came. So this is what makes you to know that market is using this range and not this one. Came here and formed this setup, created this setup, broke this low. The moment market broke this low on 4-hour, just know that market wants to use the range. Market wants to use this particular range. And as long as market do not break above this range with the body of a candle, market wants to use this range. So when do you start considering? So this is what a range, correct range with for sale SBR is what you need to see on 4 hours before you go down to the lower time frame to start looking for entry. So market first of all must give you SBR, and then then you wait for market to come back to the premium zone. You wait for market to come back to the premium zone. There was something I put in the channel today. First of all, so let me read it out. Your range only matters after direction is confirmed on the higher time frame. First of all, market confirmed direction. By SBR, market is showing that it wants to sell. This is bearish. And the thing is, as this range is confirmed on 4-hour, when the daily candle ends, when that 4-hour, because you have 6 4-hour candles will give you one daily candle. So when daily candle ends, Eventually, after some days, you see that range on daily time frame. And after some days, after a week is gone, after some weeks, eventually you will see that range on the weekly time frame, and eventually you see it on the monthly time frame. And that is how liquidity moves from internal to external. And we're going to talk about internal liquidity and external liquidity. So I wrote your range only matters after direction is confirmed on higher time frame. Mark the range after RBS or SBR is confirmed on H4, not before. If you mark your range before structure is confirmed, your Fibonacci level becomes meaningless lines on the chart. So, but with a confirmed range now, the Fibonacci makes sense. Every line, every line on this Fibonacci matters. And price actually uses Fibonacci. For example, for this sell setup, price will use the Fibonacci as resistance, the Fibonacci lines as resistance. I also said again, for a sell setup, price does not just drop, it buys first. So you can see price came here and bought. And then it swept liquidity. This is liquidity grab, very important, above the highs, and then it broke below support. Then it was it breaking below support to form SVR. Only after that change in direction does the sell setup exist. This is where we can now say that price will sell from this zone. Then traders who sell before this happens, they will get stopped. Because this is where now you will now know where to put your SL, where to enter and all that. Your SL must be above this range, above this range. Then you wait for price to come here. So when we talk about POI, we are going to talk about how we, confirm this entry on the lower time frame and all that. So when price comes here, there's something you need to look for the lower time frame that will now, confirm this for you. But basically, this is a range. This is a range for sell on H4. This is SBR. So let me go to uh, UJ for buy because UJ has been buying and and uh, and map out the range for you, the USDJPY, the range that is used. Yes. Okay. Let me use GJ. Let me see. GJ. Okay. Let me remove this. So, first of all, GJ is bullish. So if you come to the monthly time frame, you will see that GJ is bullish. It's been buying. You can see it's been, when price is breaking above resistance, it's bullish. When price is breaking below support, it's bearish. Consistently for, since last year, it's been buying. Right now, it's even at a high, it's at supply zone, and, it's getting ready to sell. But, as of then, it was buying. So since it's bullish, since it was bullish then, let's come to 4 hours and to see what price did here. So what price did was that, first of all, price broke above this resistance. This is 4 hours. It broke above all of this RBS. So when price did RBS, so price was ranging here. You avoid the ranging market. It was ranging here, even though there is still a SRP setup here, but to use the one that is clear, it was ranging here, and you just avoid it. You want, higher time frame to confirm direction, to confirm where it was going, and then you wait for it. And this was where it broke above it. It did RBS, it broke above it. So if you look at this range, you want to use, you want to know the price that market has not really used. So here, market use this range. So this low, this high, came back here, and all that. So here, this is the one this is the low of this particular range now the market formed. So this is, so here also market did this as if it will sell, and then it kind of rejected it, and then it bought and it broke the highs and all of that. So, and after breaking the highs, it came back. So this is 0.5. You don't raise 0.5. You could see the market came to 0.5 and did as if it will buy, and later swept it off as liquidity. Market uses it as liquidity. Market came to 0.6, is where the premium, the discount zone started for buy, discount zone. So for buy, you buy at discount zone. So a range shows you, the discount zone, the premium zone, the equilibrium. These are the key the three key components of a range. So for buy, you buy at discount zone because it allows you to buy at a cheap price and sell when price is high. For sell, you sell when price is expensive. You enter at the premium zone where price is already facing resistance at the high. But when you want to buy, you buy when price is down. That's why in trading, 90% of trading is waiting. When price has done all this things, it took days before price came back here. It did this on 24th February and came back on 5th March, probably close to a week. And maybe if we talk about POI, we talk about the confirmation we use, how we knew where to buy from here. And this is where you enter. If you enter here, buy, your SL should be below the low of 4 hours. So this, and you target the high, the objective high. This is this. And price got that, and the price got that, and that was it. And even right now, this market is buying again. You could even tell the range that it's using. Came back again after breaking above this high. You could see the range is using. Swept all of this liquidity, picked order from here, and it's going up. This is where it will now sell from. I even have this sell set up here because it broke lows here. It will then sell from here, but right now it's buying to the sell zone. So very, very important. So let me go back to this. So these levels are very, very important. These levels on your Fibonacci, very, very important. If it is for buy, 0.6, that is where the discount zone starts. For sell, the same place. If you flip it for sell, that is where the premium zone starts. Deep discount 0.7, then 1.0 is where price comes back to the other block where the main move started. That is where price comes back to the other block where the main move started. Very, very important. Very, very. So you can see premium zone, discount zone, equilibrium. All right. Premium zone, discount zone, equilibrium. So the premium zone. So in trading, you buy cheap, you sell expensive. And SRP enforces this rule. It enforces this rule. The discount zone is everything below the 50% equilibrium. This is where buy setups live. Price is cheap here relative to the range. And this is where the market makers, they enter their buy orders from. You want to move with the structure. You want to move with market makers. You want to move with institutions. Then premium zone is everything above 50%, of the equilibrium level. This is where sell setups lives. Price is expensive here. Institutional sellers distribute at premium zone. They sell at premium zone. If you are looking for a buy and price is above equilibrium, you are buying expensive. That is not SRP. If you are looking for a sell and price is below equilibrium, so you don't buy at premium zone and you don't sell at discount zone. Very, very important. So below discount zone for buys, below the equilibrium, from 0.6, 0.7, that is for buy discount zone. That's where you have the first POI 0.6, second POI, type 2, 0.7, and then type 3, 100% retracement. If you flip it above the equilibrium level for sell, also 0.6, 0.7, and 1.0. So never buy a premium zone, never sell in a discount zone. The market will always try to pull you in the long direction before the real move starts. That is inducement. If price have not cleared liquidity, you are the liquidity. So let's talk about internal range and external range. And this is where a lot of traders get confused, right? You don't have one range on the chart. We have several ranges on the chart. There are ranges inside ranges. So when you understand that difference, it will separate you from traders that are struggling in the market. The external range is the bigger picture. It is the swing created by the major structural move on 4-hour time frame. That is the range you confirm direction from, you mark POI from, and you execute from. So this is the external range. This is the 4 hours, right? This is the 4-hour range. This is the external range. This is the external, right? And the internal range is the lower time frame. 15 minutes, 5 minutes, 1 hour, 30 minutes. Anything below 4 hours is the internal range. When price comes to your POI, so let's come to 1 hour. When price comes to your POI, it will be forming small ranges, right? It will be forming small ranges. get to here. The internal range is what forms inside the external range as POI moves toward, as price moves towards the POI. These smaller swings form their own mini ranges on the lower time frame. They are the ranges you use on 1 hour or 15 minutes or 30 minutes to confirm entry and time your execution. So the external range gives you direction and location. It shows you, it confirms the move because you want to enter. As traders, we react. We don't predict price, we react. So price confirms direction on higher time frame, we enter. And it confirms this direction through RBS, SBR on 4 hours. And then we wait for price to come to our POI and then we enter. So internal range gives you timing and precision. When you drop to 1 hour or 15 minutes at the 4-hour POI, you are looking at the internal range. So the RBS or SBR you see on the lower time frame is that internal range. That's the internal range. And you want to enter at the right internal range. So when price came to that zone, to the 4-hour POI, look at what it did. You can see it did bullish liquidity grab, which is also one of the confirmations we use. Then it created this high here. There was a high that is here. Price broke above it and came back and picked order. So this is like a 15 minutes range. It's like a 15 minutes range. If you mark it with your Fibonacci, it's also correct. You can see that price still came back to the discount zone, even inside the 15 minutes. Okay, this is even inside the 1 hour. So let's see this. This one, it didn't come close, but most closes, sometimes price comes back, it touches that 0.6, and that is where I pick order from. So this one already, price has already confirmed on the higher time frame. You just want it to break above. And if you are doubting about this, you want price to still break all of this high, it did it here. And so the reason why price didn't go down was probably because there is a fair value gap here. Let's use that fair value gap. And those fair value gaps, they are powerful. Are you following?
Yes.
Yes, yes, sir, yes, sir, yes, sir.
Yes.
So price move from internal range liquidity to external range liquidity. What does it mean? It means that here, we are in the lower time frame. We have already confirmed RBS for this pair that price will buy, and this was when price was here. So this thing, on 4 hours, this was where it was showing the price already. So you could see it even on 1 hour price book above. So and it took a lot of candles. It reflected on 4 hours time frame as RBS. So when price was here, this is why I am always patient. On Monday, a lot of people are jumping, and market is doing like this. You see them loading SL, loading size. Price has already confirmed buy, and I see people saying buy at 50%. After they say key level, they say after RBS, enter at 50%. That's a very dangerous advice. Don't take that advice. It doesn't work at 50% range. You can see what price did there. So when price has already confirmed, there are some people, this is their strategy. When price breaks above, they buy from here. And what happens? Price still came and swept all of them. There's no SL you put that will protect you. Except you, and if you want to target here, what do you want to target here? So they entered here, and so you wait. That's why I wait. This intake day. So it was on Monday. That's why I say avoid Monday. Eventually, price go to the POI on Thursday. So Wednesdays and Thursdays are higher probability days. Wednesdays and Thursdays are higher probability. You just be patient. Don't rush with people on Monday. On Monday, look at what price was doing. It has already broken above, and it was creating buy setups here on the 50% of the range. You avoid it. I still came back on Thursday, Wednesday. So from Wednesday, it was trying to confirm, and then on Thursday, that was when it finally confirmed and PQ. All the people that entered before then were hit out. So price has already confirmed RBS on 4 hours. Then you wait for price to come to the 4-hour POI. This is in a lower time frame. This is 1 hour. This is 1 hour inside the 4-hour POI. And so this is lower time frame. This is 1 hour, 30 minutes, 15 minutes. In all of those things, they are internal range. And this is the internal range on 1 hour. If you go to 15 minutes, it's the same thing. This is internal range. This is the low. And this is the high. All right, this is the low and this is the high. Price broke above, came back and picked all that. This one, it doesn't even need to. There was a fair value gap here, and you could see there's a fair value gap. That was why price didn't go down. You don't even need to confirm further. You already confirmed on the higher time frame. You just want to enter. You want price to give you confirmation and you enter. So price moved from internal. So price now has confirmed that it will buy from here, and it has picked order here on the lower time frame. This is the internal range. You are targeting now from here. You are entering. You are targeting the 4-hour objective target, which is here. It's around here, and that was price later got there on Friday. So so this is what they say, that price moves from internal range liquidity to external range liquidity. So you are entering from you already confirmed on the higher time frame, then you come to the lower time frame inside the 4-hour time frame POI and you enter. We are not targeting the lower time frame high, you are targeting the 4-hour high, you are targeting the external range high, which is the 4-hour high. By then, days are past, it has also become the daily high by then. And so that is your objective target for SRP. So that's what they say. Price moves from internal range liquidity to external range. Price moves from the lower time frame to the higher time frame. And it's forming small ranges. You see all these are ranges on on the lower time frame. It's forming it as it's going, it's forming it. These are small ranges. But all of these things that it's doing is serving the higher time frame. It is going to following the direction of the higher time frame. And you want to enter a trade when the lower time frame finally aligns with the higher time frame. When it confirmed all of this on the higher time frame, the lower time frame had not yet aligned with the higher time frame because lower time frame was here. You want lower time frame to come down to the 4-hour POI, to the higher time frame POI. When it comes back, come down there and gives you confirmation, that's when lower time frame will now start following the higher time frame. That's when it will start buying and it's heading to the higher time frame objective target. That higher time frame objective target is external range liquidity because price moves from liquidity to liquidity. It's external range liquidity. Basically, it's the objective target. Where it started from is internal range liquidity. It came back here. You could see that it swept liquidity, swept this low, collected liquidity here, and it gave it strength in need to target this high. The moment it targeted this high, it came back again, collected liquidity, and has been going up since then. So that is how price moves from internal range liquidity to external range liquidity. Basically, what it means is that price moves from the lower time frame to the higher time frame. It moves from the lower time frame to the higher time frame. But you want to get confirmation from the higher time frame. So the question is, which time frame is more important? Which time frame, is it higher time frame that moves the lower time frame, or the lower time frame that moves? Is higher time frame that controls the lower time frame? The lower time frame obeys the higher time frame. So whatever, if you are trading 15 minutes, 5 minutes, or 1 hour, and it does not align you without confirming anything on the higher time frame, you are making a mistake because lower time frame at each point in time is always trying to obey the higher time frame. And if you don't know if you don't know what higher time frame is doing, price will hit you out. The lower time frame does not serve itself. It's just a servant. It doesn't serve itself. It goes to the direct. It may be, you may think it's just giving you some random moves, but eventually it will go to the direction of the higher time frame. And that is why you must trade with higher time frame structure, not against it. So let's go back. So we've marked for buy, we've marked for sell. Let me mark this. Okay, let me go to this particular pair that I like. V75. So I will mark for sell here. So you can see, we mark out what price was doing: higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. The high must always be higher. Then it created a higher low, and then the higher high was not higher than the previous high. This is where price started. Probably so. If this happens and price could not break in a bullish market, price could not break above the previous high. It is called failure swing. Failure swing. Yes, a failure is like, the electricity company, they interrupted light, and the next thing you see is price broke the low. Price broke a major low. And what it means is that the bullish move was interrupted, causing SBR. This is higher time frame. If this thing happens on 1 hour, you're marking this range, it happens on 1 hour, nothing may really happen, because it may be a 1 hour that is doing pullback and all of that. But if it happens on 4 hour like this is a standard range. This is a bigger range. This is the 4 hour is actually the medium. It serves both the lower time frame and then daily, weekly, and others. Anything that happens on 4 hour changes the market structure. It affects the structure. But if this kind of thing happens on 15 minutes or 1 hour, it may not affect structure. But if it happens on 4 hour, it affects structure. That's why, as a trader, if you are focusing on 4 hour, getting your direction from the 4 hour time frame, your losses will reduce. The moment it happens, so this becomes the range. So you want to wait for the range, the full range to form. So this was when the full range formed. So it started with a rejection, even though it was not a bearish liquidity grab, but there was a rejection here. Then price broke the low. So if you mark it, so let's mark it. This is the high of the range. This is the low of the range. All right. And you could see first time price came to equilibrium 0.5, it tried to sell and later used that zone as liquidity and sold from 0.6. All right. Price later. So before price moves, it must sweep liquidity. Before price moves, it must. So you can see where it did that. It swept liquidity there. So, but I'm going to mark that zone and then go to the lower time frame. Go to 1 hour so that we see what happened there. This was on 19th March, not far. And I like what happened here because even on 1 hour, price still came and gave us that information. So this was, so you wait for price to come. After price broke this low, you don't do anything here. A lot of people will be rushing to sell from here. You don't do anything here. You mark the premium zone, which start from 0.6 and wait for price to come there. But price came to the middle of the range and it tried to sell. Eventually, you use that zone as liquidity. Use that zone as so it came here higher low, higher high. It broke this low, higher low, couldn't break the high, broke this low. That gives you confirmation of where to enter. So even on the 1 hour, if you see the 1 hour still forming its own range, you could see the range of the 1 hour. This is the high, this is the low, and price still came to the premium zone of the 1 hour. It still clear liquidity, clear liquidity again and again before it finally sold. So wait for price to come back and then you sell. So basically, you know that once price has confirmed this on 1 hour or even 15 minutes, you know that you just wait for price so that you can sell from here. Your SL will be, if you really want to put SL at invalidation zone, it should be above this high. But if you want to take the risk, you can use the 1 hour, but always put your SL at 4 hour invalidation zone. But this is, so this is the internal range that market formed on 1 hour. So what we are saying is that price is going to move from this internal range to external range. This was the objective target. This is the external range target, the 4 hour objective target, and price got there. The other thing that price does beyond that is a bonus. But this is your objective target you are targeting. So you want to sell from 37,000 to 35,000, which is like, maybe you can call it 3,000 pips. 3,000 pips. Yes, you can call it 3,000 pips. That is still massive. But price sold, sold and sold and sold and sold massively. All right. And since then, it's been selling. So, giving confirmation. And what did price do for buy? So let me mark, because this market is bullish. All right. That was a sell from a high, and for buy, what did price do? So let's mark the buy. So let me remove this. price came here. If you wanted to sell, it would just keep selling. But it came here, formed a support zone and broke above it. The body of a candle. 4 hours time frame, which is massive. So the moment price has done this, you just wait for it. You mark your range. So this is your range. This is the high. And if you go to daily time frame, you will see a bullish liquidity graph. This is the high of that range. Basically, you are waiting for. So this is the discount zone for buy. You're waiting for price to come. Once price comes to 0.6, so this is the discount zone from. Discount zone from 0.6 to 1. Once price comes to 0.6, you start looking for your confirmation on the internal range on the 1 hour, 15 minutes, or 30 minutes. You look for your confirmation. So this was on 1st April. Wow, just recently. So let's come down. You can see what price did there. It came, broke the high, and just came, did not break above this. So that's why you always use the 4-hour rule. Didn't break above it, but just swept it and bought. Started buying. On 15 minutes, you will get even clearer confirmation on 15 minutes. And it got to got to this. It has not gotten to this target. Maybe if you just leave it, and this is where it's coming to. But if you get 1:3, you can just come out. And since then, it came back again and bought. Well, I think what it did was that because he swept that low, he came at, on 1 hour, he gave another confirmation. So let's see on 4 hours what he did. Because I'm seeing that he gave another confirmation. So let's remove it. He created another range again, testing, using that support again. So let's see what he did. And this one was, like our A setup. It started with a bullish liquidity grab. Bullish liquidity grab, then he broke the high here. RBS, even though it hasn't really gotten to the top, but it broke all the resistance here. So the moment he did this means resistance becomes support. It means that these zones have become a support zone again. That this market does not really want to sell, it wants to buy, and it's coming back to retest that support zone. So you mark your range. So let's mark the range. The high of this particular range. You need to know the range that market wants to use at each point in time. Mark the range. And for buy, like I said, always mark, where you should wait for is from 0.6 of the Fibonacci to 1 for buy. For sell, the same thing. Fibonacci becomes powerful after range is complete. If the range is not complete, Fibonacci is useless. But the moment the range is complete, every line in this Fibonacci plays a role. You can see at 0.5, price came and did as if it was buying, it swept it. So you wait for price. Once price comes here, you are following this, you start looking for confirmation, 1 hour time frame or 15 minutes. So let's go to 15 minutes, 1 hour. What it did was basically the other confirmation it gave on 1 hour, basically from here, breaking above, basically it just came and used this low as liquidity. That was it. Use this low as liquidity and just swept it and started buying from there. And on 15 minutes we may get something that it did there as well. So let's see. So after sweeping it, so on 15 minutes, basically what you on 15 minutes, what you could look for is after sweeping it, you could see what it did here. I broke above this high. So this is like 15 minutes out. It's a small range of 15 minutes. Sometimes you may not get what you're looking for 1 hour. But I say 15 minutes, 30 minutes, or 1 hour. If you are already sure about the zone and you've already gotten your bias on higher time frame, you can use 15 minutes as well for confirmation. So you'll see price broke above and basically it came to this other block of fair value gap So the moment you can just target here. The moment price comes here and use the 4-hour low, you just enter. This is where price was confirming, and this is just today. Wow, this is where price was confirming the buy. And if you are targeting the 1 hour, okay, the 4-hour objective target price has done that. Wow, this is it. So this is price moving from internal range liquidity to external range liquidity, and here it did that. And what it's telling me also is that this pair wants to really be bullish. It doesn't really want to sell. It doesn't really want, and it did this today. It did this today. I trade this pair. It used to be just that I don't want to just be looking at the screen all the time because you can't really set alerts. But it's really a very good pair. Very good pair. You will see the amazing confirmation it did. So that's the shelf. Okay, JP225. Shelf. JP225 is bearish. And I even set some kind of alert. So you can see for forex I could set alert, but for synthetics I can't. I pay for a trading bot and a Telegram bot, but otherwise, I mean, synthetic is good. I mean, some pairs like you see that V75 is good. So, but let's look at a very good setup that happened here, and so price was selling. When price was selling here, the war started and it was selling. You just wait for price to give you your exact confirmation, and I like this. Here it did the bearish equity graph. Look at how sell starts. Look at how a sell starts. It starts with a bearish equity, a liquidity graph. Sometimes it may not be a bearish, it may just be a rejection. You'll see a wick. But if it is a bearish equity graph, then the next thing you want to see is that price breaks the low. And that was what price did. It broke all these lows. And when it broke it, you wait for the full range to form. So it broke it SBR. That is SBR. What's the meaning of SBR? SBR means support becomes resistant. The moment you broke all these lows, it means that support, has become resistant, that sellers have taken control of the market from buyers. RBS, resistance becomes support. It means that buyers have taken control of the market from sellers. So here, sellers took control of the market from buyers. So when everything has been, market has finished doing what it's doing, that is when you mark your range. A lot of people will be rushing in. You just be calm. That's why trading is patience. This is how I've been very patient. I've not lost a trade. I've not really lost a trade like carelessly on this pair. Carelessly on this pair. And all the trades I've called in the channel, on this pair has hit TP. I don't think there's any trade on JP225 that has hit SL that I've called. I don't think so. Because of how careful I am and how I know this pair, even the fundamental aspect. So this is the full range. This is the high. This is the equilibrium. You don't do anything. You can see price came to equilibrium. You don't do anything here. And this is the low of the range. So what do you wait for? You wait to sell at the premium zone. For sell, you sell at premium zone. For buy, you buy at discount zone. And premium zone for me starts at 0.618 to 1. All right. So when price comes to, so let me remove all this Fibonacci. When price comes to that, to that premium zone, that is when you go down to 1 hour, 15 minutes, or 30 minutes and look for your entry. So let's go down to 1 hour at that particular place. So this was the place. I like what price did there. So I will show you exactly what price did there. And I took a sell here and why I took that sell. sometimes price, it's always good for if price can give you that confirmation 1 hour, but you miss a lot of trades if you are waiting for 1 hour. But it's worth it. Sometimes price may give you confirmation on 15 minutes, but not on 1 hour. 15 minutes is also okay, but don't go below 15 minutes for confirmation, and don't go for lower time frame confirmation, and don't go above 1 hour for lower time frame confirmation. So 1 hour, it came to the premium zone. This is the premium zone, and let's look at what it did. It was doing, this is higher low, higher high, higher low, and this is okay, higher high. It broke it a little bit, higher low, but this high couldn't break this high. This is where problem started. The market probably wants to have a furious swing. So the next thing we saw was price broke this low, 1 hour time frame. Price broke that low, and that shows you that market wants to sell. So you market, this is SBR on 1 hour time frame. And what you see on 1 hour, you see on 15 minutes, you see even on 1 minute on every time frame. So basically you just know that price rate. So the 1 hour range, if you mark the 1 hour, this is a high. If price do not go to 0.6, it means that there was a favorable gap at that. So here you don't really want price. You're not really expecting price to still come to 0.6. Price may just use a liquidity, a bearish favorable gap, and just start from there. It has already confirmed you've already gotten your confirmation and all that. So once you've gotten this confirmation, when price has pulled back, maybe I think there was a bearish liquidity, a favorable gap here. You just enter here. Your SL is above that high. That's it. And that was it. And that was how this price sold. And this is internal range liquidity. And you could see the objective target here. And later got there after some days, after several days. It later came back, to this zone, but it didn't, hit your SL, came back. You could still get 1:3, come out here. When it comes back, you still enter around here. And it later got to that objective target. Right? And since then, it's been selling for buy. You can see how price broke above here, picked order here, and just buying. But this market is bearish. So basically, there's really nothing there. There's really nothing there. So so that understanding the range is very, very powerful. Understanding the range is very, very powerful. Let's see what we have here. So inside the range, when price comes to your POI, wait for price to clear liquidity before price always clears liquidity basically, even before it comes to your POI. So price must always clear liquidity. Price do not clear liquidity, you are the liquidity. Equilibrium zone. Why the equilibrium zone is inducement territory and not entry territory? And this is the most important rule in range section. The 50% is not a trade zone, it's a trap, and I've shown you that on the chart. It is the middle of the range. At the midpoint, price is neither cheap or expensive. You have no edge here. You have no edge here. So you're not doing anything there. All right, that is precisely why it is dangerous. It looks balanced, it looks like fair entry. That is why it is dangerous. The market uses 50% of the zone, of the range, to engineer liquidity, to engineer inducement. Price will come into the range, pause, convincingly at the equilibrium, and create a structure that tempts traders to enter. Those traders get stopped out. All right, those traders get stopped out. The price continues to deliver POI at 0.6, 0.7, or 1.0. Right? So you don't enter there. So look at all the things that we've talked about. We talked about the range, what a range is. We said that it is the swing created by the structural move on H4 4-hour time frame. Varied only after RBS or SBR confirms on 4 hour, not before. How to mark it? We showed you how to mark it. Fibonacci levels, I pointed it out, and even the trap, right? Then premium zone, which is above 0.5, especially or for sell below, especially from 0.6, and then discount zone below 0.5, for buy. Internal and external range. External range, 4 hour, structural move. Internal range, the lower time frame range that forms inside the 4 hour POI. All right. And that is where you enter. You get your precise entry from. Right. The IDM, the fake pullback before the remove, it must not. So then do not buy, do not trade at 0.5. So basically that is it. Any question? Does anybody have any question?
Yes, I
No.
do.
Okay. All right. Ask your question.
I think Joshua wanted to ask a question. Let's go first.
Okay, Joshua, ask.
Yes, sir. Please, I just want to ask if it's possible for us to have the notes so that I can read to also recommend
No,
the.
you will get the recorded video and it will be on the YouTube channel. Don't.
Okay, boss. Okay, boss.
I did I ask?
Okay. So I wanted to ask about that 4 hours 4 hours SRP.
Yes.
So let's say I use it by from 0.75 on 4 hours.
You said
Is there any, let's say I miss the first buy, that's the buy that from the 0.65 or the 0.78,
yes.
that's the premium zone.
Yes.
Is there any other alternative for me to like continue with the trend on 4 hours, or
Okay. They're saying
it's
if you
compulsory
don't.
to go below?
Okay. Okay. You mean if you do not enter the trade where it started and the market and
Yes,
price moves without you, should you enter again?
yes,
Is there a way, another way you
yes,
can? No. It's not.
yes.
It's not advisable. It's very risky. It's not advisable. In fact, I've tweeted against it. It's not advisable. There's no professional trader that will advise. Once price leaves without you, even JC Livermore says it. This was a trader that made $100 million in 1921, 29. He predicted the stock market crash of 1929. If price leaves you, just leave it. Market gives lots of opportunities. Market will give you a lot of opportunities. It's always good for price to enter, it's always good for you to enter at the right entry point. Because price can, some people will say, well, what other traders will say is when price does another SBR or RBS, if it is for buy, if it does another RBS and create a buy key level, you can enter. But price can, you could see what GJ did. Price can still, it may do as if it's creating that RBS, but it can still come back to the main, it can still come back. Let me show you what GJ did. It can still come back to the main zone and hit you out. It can come back to the main zone and hit you out. That's why if you miss a setup, just leave it. Let me show you what GJ did. GJ.
And can I ask my second question, please? Like while we're looking for GJ.
All right, ask your second question. So you could see what GJ did here. After he broke above and he picked order here. Let's say somebody missed it, and then the person is waiting to enter here. This is where he formed another RBS. You enter here. What did price do? This week, price swept all of it again, came back to where the buy started, and that was where it bought from. So if you miss this trade here, this is where you should enter. If you miss it, you'll leave it. Except probably it comes back again. But if it's coming back, it's no longer a fresh key level. Because a fresh key level is a key level that has not been mitigated. We are going to talk about it. It has not been mitigated. It's still risky. So if you miss a trade, just leave it. Wait for another one. Okay, ask your second question.
Okay. Then for some markets that are like 4 hours level, let's say you enter a trade from the premium zone, that's 0.68, and the market is going up. Just like let me use
enter, you know, if you say premium zone, it means you entered the sell trade, right?
uh, premium or discount zone, any of them.
Okay.
Okay. So when you take that kind of trade and market is going on in 4 hours, next thing it starts ranging at the top,
Yes.
making that loss of should I call it misinformation, just ranging at the top, then
Yes.
it breaks again for your buy and goes up. If you're to mark SRP, which leg are you using? Are you going to use a leg from the ranging zone, or you go back to when it stopped 0.65? If you're to mark it for a new SRP,
If market has not gotten to the objective target of the first range, you
no,
will
I
still
mean like
use
it has gotten to the objective target,
target of that
but
first
you,
range. Okay.
yes, and you want to mark a new SRP for that same pair.
Yes. So
So
you
when
wait for the full range to form. Yeah, you wait for the full range. For example, let's look at this. This is UJ. All right. This is UJ. UJ, we've been buying
yes, I think
UJ.
it's
Uh,
UJ that
we've been
made
buying
that.
UJ since when it was. So let me show you something. This is okay. This is for us. We've been buying UJ since 152. This and it's been giving setup since then. Here, it gives some kind of SRP setup. So let me mark it, even though it's not clear. It may not be clear to some people, but you will see it. Because where I think my chart is here, me and her took that buy. So RBS, and it's just a small range. And okay, let's just say this is the low, that's the high, and price came back to to this discount zone above, and this is objective target and deliver. So let's say you miss this, you now wait for price to form another one, and there was one that it formed. It wasn't really clear, but that was it here. It came back and picked up that here, but this is not like a standard one. So let's say you miss this one, so you wait for it here. We could see what it did here. So here it did this rejection, then broke above here. And you already know that. So this RBS. You already know that there's a massive 4-hour fair value gap. So market may use this, and this is the high of the range. This is the low of the range. This is the high of the range. Guys came back here, and this is the objective target. So you use this range. So even if you miss setups, price kept giving setup on UJ. The same thing here. This one may not be so clear. Let me show you the one that is very clear. This is liquidity graph. Even if you don't want to use it, this is a bullish liquidity graph, and price broke above this high. So broke above this high.
Please, can you go to the current UJ market? Let me just
I will, I
share
will,
what
I
I
will,
mean.
I will. So this is the low of the range. This is the high of the range. This was when price came. This was 19th March. I think I called this trade. Yes, I called this trade in the channel. This was when price came. And you can see all of this. I saw a lot of mentors were telling people to buy from here. And price came on Thursday, swept all of them, picked up here, and eventually delivered. Right? It delivered. There was one that we missed. So you could see when it delivered, price later. So this was the one that we missed. Price used this range, this low, broke above that high. So price will always create. Don't worry if you miss, price will always create. So it broke above that high. And picked order here. So you can see it broke. You can see I don't want to mark it, but there's already RBS here, and on 1 hour he picked order here. I will even show you why 1 hour I picked order here, and already it has given 1:2, 1:3, just because of this conflict. So UJ kept giving setups, kept giving a lot of setups. But let me go to 1 hour time frame.
Okay.
So it's
Okay, just hold on in this for 4 hours. Let me explain something. Yeah, just like this current market is, you can see UJ is currently ranging.
yes.
Okay. That's where we here say this market gets to TP. Where will you be marking your next SRP? Will you use this leg, but the last red candlestick here, or use this ranging zone red candlestick?
Well, for this particular pair now, if it hits TP at 160, and we have to look at it again, because 160, 161 is a resistance. If the market is still coming up, let's say if it was when it was coming up, I could deduce where to mark the range. Sometimes price may still come down. This UJ can still sweep here as liquidity, and form a new range here, and it could use. So it is at a resistance zone. It is a resistance zone, so it's not. You don't buy at premium zone. Let me show you. It is already at premium zone. Buying, so look at where it is. You will see where it is. So buying UJ here right now is very, very dangerous. It's dangerous. But we can use example from another pair. So let's say we use from US, okay, JPT2, USD let's see. So you want to also make sure that market is not in a supply zone. If it is not in a supply zone, you can always, so you could see USD. I like this. I really like this. Okay, so let me start. When USD was here, when it was here, you could see this range, which liquidity grab, and this is a huge range. Which liquidity grab. This was the high of the range. It first of all came here, picked order, later came here and picked order. So that's why I say, like, UJ can do something like that. It can still clear liquidity and come, and especially USD press does it, and come back again and still pick order from discount zone. So don't be aiming higher. Wait for it to. If it does not come back, if it doesn't do a massive pullback, leave it. No longer buy UJ. But you can see what this one did, and you're waiting for another setup. Look at where it created that setup, that kind of setup. But this is not clear. You are looking for something that is clear. Let me give you something that is clear. So I like this, what it did here. You can see RBS, and this is a bullish liquidity graph. A bullish liquidity graph. Look at the high of the range. The price did 100% retracement and came here. This was on 23rd of March and came here and picked order. And not just that, it still gave you confirmation on 1 hour time frame. You see. So let's go to 1 hour. And it confirmed with EU when this one was buying, EU was selling. So look at what it did there, which I like. So it came back to this zone and formed a resistance here. In fact, when price wants to give you a setup, it will be very clear. That's why if you wait long enough, price will intentionally give you like what he did here. If I had seen this, I would have taken it. Broke above this high and came to this low. So if look, you could see that price has mitigated here. It picked up here, then it broke above here. So if you mark this is an internal range liquidity. You can see that price still came, here and picked up that, and probably there was a fair value gap here. So you enter here and then target that 4-hour high, and that was this is like the best trade on this pair in recent time, right? But right now you will not be looking to buy this pair. It is at resistance zone, a massive higher time frame resistance zone. All right, T came and gave entry again, but this setup was not clear. But if the pair is on higher time frame discount zone and is moving from there, if it forms, if you finish forming a range, you miss it, it will form another one. You will be seeing it clearly. And how you will know is that it will confirm it on higher time frame, come back to lower time frame and still confirm it. You will know. You will know the one that price will use. The more you study the charts, the more you practice, the more you eventually know. But if market is at resistance every time, you could see every time it comes here, it faces resistance. Every time it comes here, it faces resistance. You will not be looking to want to buy from here. No. It's only when market pulls back again. Maybe it pulls back and come back, which it may do. Then you can, and gives you confirmation on lower time frame, you can still enter the buy. Any other question? Do you understand this?
Yes, sir. Yes, sir. From the UJ, sir, you want to do something? Please, can you complete this, sir?
UJ.
Yes, sir.
Thank you.
Okay, I'm in UJ. Okay, go on. What, you were asking something on UJ. UJ has picked up
To
that
do
he
something.
wants to do something.
You want to, yes, in that UJ. Yes, that point. You want to go back to the time frame to check the entry, how the entry is going to work, sir. From
Okay,
that box you draw.
okay, from here. From
Yes,
here.
from that box. Yes, to check the entry in smaller time frame.
Yeah, it was a trade that paid out last week. Let me show you how the entry worked. Okay.
Okay, thanks, sir.
I like UJ because if you want to give a confirmation, it will give you a very clear confirmation. So what did UJ do? You want it to break above a resistance to show that it was buying,
Okay.
it did a bullish equity grab and came here and broke above that resistance. So it gave RVS here. And even if you say that that is not the high, even this high was broke. And what I like about it, even on 4 hours, it reflected on 4 hours as well. It broke this high on, even on 1 hour, it broke up to that high, which is massive. Already, this is inside a 4 hour bullish POI, a 4 hour bullish range, and it's doing this on 1 hour. It came here, it was doing lower, lower, lower low, lower high, and refused to do again. Came here, did a lower low, came here, did another low, and then broke the high, broke the lower high. So when price broke the lower high, it doesn't want to sell again. It has broken this. So when it did not break this, you could say, okay, but it broke this lower high. So you just mark your range. This particular entry, I missed it. The reason why I missed it was that I was waiting for price to come to discount zone, but he used the bullish fair value gap around here, and it still came. It still came. But another reason why I missed it was Trump was giving a speech. I was hoping that this thing will play out maybe during the US section. But when everybody was sleeping was when it played out. You could see this was 2 a.m. Nigerian time. The moment Trump started talking, they started buying, USD shares started buying, EU started selling. So if you are sleeping, you have missed it. But it was really a good, it was a very good move. And so this is the range that price created on 1 hour, and it took it to, you could say, you don't, and also in SRP, when price reaches 50% of the range, it has given you, market owes you nothing again. Price must not always reach the 4 hour objective target. It must not always hit your final TP. If it gives you 1:2, 1:3, it's okay. You can come out, because sometimes if there is a massive resistance like this, if there is a massive resistance on the higher time frame, price may reject from there. B225 likes to do that. So it, price has hit you out. So it came here and started facing resistance. But you could come out here. You enter at 158,500, you come out here and you wait for another good setup. So that was what you just did.
So
I don't
immediately
want
watch 0 is we are going to click buy.
once this on the higher time frame, it has already confirmed that it's bullish. I've marked the range of the 4 hours. So let me show you. I think you already know the range of the 4 hour it was coming from, right?
Yes, sir. Yes, sir.
Then it came
Yes, sir.
inside that 4 hour POI. And okay, let me do this for those that be watching this video. look at the range. Okay, you can see the range. Okay. So this was the range it was working with. This was the range it was working with. In fact, this is even the low. Okay, this entire range it was working with, broke above and all of that, and came back. This is the high of the low that created a high, and then it came to this zone. Into this zone. So it has this is the second time it was coming to this zone. That's why also if price is coming to a zone for the second time, you want that lower time frame confirmation. So let me remove that. So once price comes back here, you now go to lower time frame and you want the higher lower high. If it is for sell, if it is for buy, you want price to create higher low, price will be creating lower high, lower low, lower high, lower low. Where it will be interrupted is where price breaks above with the body of a candle, the lower high, the lower high. So lower, you could see lower high, lower low, lower high, lower low. You couldn't create a new lower low. Then it broke above this lower high. This particular lower high price broke above with the body of a candle. That was when it confirmed buy and then picked over here and you just started buying. So if I want to buy UJ again, we no longer buy UJ, here. I don't want to buy you. It's not good. You don't buy at a premium zone, except UJ does a deeper discount. So what UJ could do that looks meaningful to me is that UJ could come to this zone, which means it will use all of these rules as liquidity. And if UJ is able to come into a deeper discount zone, any of these zones, if it does a deeper, because a bullish market, any deeper, any sell is a pullback. Any sell is if it comes to if it does a deeper retracement and still gives me lower time frame confirmation, then I can buy it. And usually likes doing that. Since it was buying, you could see that was what it was doing. It started buying from here. I took this buy, came out at here, it did a deeper retracement, picked order here, did a deeper retracement. So you always wait for price to do that deeper retracement and give you confirmation. Its price does not go straight. Anything that goes up must come down. Anything that goes up must come down. Look at this massive, something that I really like in SP 500 for the sell that it did. Price broke this low. This is 4 hours. SBR. This is a bearish liquidity grab. And at that point, this is your range. This is your full range. You see, and price came exactly to 0.8 and picked order, and hit TP here. But on let's check the 1 hour time frame. Even though this is indices to confirm exactly when price did this. This was on 9th March, which is incredible. On 9th March, you see, so we've done for buys for sell. So let me remove all these ones. When price comes to that premium zone, price is doing so. Then price is still buying. You want the higher time frame to finally align with the lower time frame. That is when price breaks below the higher low. So this is higher low, higher high, higher low, higher high. This. So let me. This is higher low, higher high, higher low, higher high. Then it did a sweep. It didn't want to go again. Higher low. It has not confirmed sell. Then higher high. It did not break above, which is worrisome. This is a higher low. What did price do? It broke below this low. So this is your confirmation that this is now price telling you to enter the trade, right? This is price breaking below a higher low. This is SBR on 4 hours. And there was and basically price came here. So basically it did a pullback. You just enter and some people they just enter when price up. So it did a pullback here, and your SL is above this high, and that is your confirmation to enter the trade. And you will see, He gave you 1:2, 1:4, even 1:4. He came here and then he sold. And then he finally got to the objective target and all that. So, is there any question? Is there any other question? If you check the chart, you always see this thing. But trading is all about patience. Be patient, be patient, be patient. Wait for exactly. Market makes the, market, is the casino. Market wins 90% of the time. It creates moves that enables it to win 90 to 95% of the time. He wants you to bend to his will 90 to 95% of the time. It only allows you to do your own thing. It bends to your will only 5% of the time. And that is when it gives you your exact setup. In the month, it may be, in a particular pay, it may be 1 or 2 times a month. For example, this thing that happened on SP 500, very good setup. And it comes maybe just once or twice a month. And that's when you take your entry, you take your trade with confirmation and everything goes your way. But most of the setups and most of the things that you see in the market for, okay, look at this, what do you trade here? But you see people trading, but this is nothing. This is a ranging market. You can't really do anything in the ranging market. So most of those moves are traps. If you enter the market, will use it as liquidity. You wait until market gives you exactly what you're looking for. All right. Any other question?
Yes, sir. Thank you so much, sir. God bless.
You're welcome.
Thank you.
Thank you, everyone. Thank you for joining us.